Hello. Welcome to the live stream, and an alert's just going off as I'm talking about it. Welcome to the live stream. It is Tuesday, the 14th of January. My name is Jonathan Kibbler, Senior Market Analyst here at Blueberry. I'm going to be taking you through the markets. We're going to be taking a look at some key economic data. We've just had some key inflation data out of the US. PPI coming in a little bit better than expectations. So we've started to see a little bit of a bullish move in the stock market. Will that be sustained though? That is something we need to have a discussion about. We're also going to take a look at currencies today. We're going to be taking a look at the US dollar. We're going to have a look at some other markets as well. New Zealand dollar really high on my priority at the moment, but not necessarily against the US dollar, but against other weaker currencies. So who have we got in today? Let me know. Hi Harmeet, hope you are doing well. Vincent, hope you're doing well as well. Hope you had a good trading week last week. Anybody else as well, give me a wave, say hello. As always, if you have any questions as we're going along, feel free to drop me a question as well, and we'll get straight into it. Good day to you as well, Ratish. So really interesting markets at the moment. Hello to you as well, Wizzy. Thank you for the shout there. Really interesting market. We've had some key data come out, and the market has decided to do a little bit of a turnaround right now. We're looking at sort of stocks and things like that, which I'll jump onto in a second. Just have a quick look at what my alert was. It was New Zealand Swiss. New Zealand Swiss alert has just gone off, which is a market that we've been talking about as well. So let me get to where I wanted to be. I wanted to be looking at the US 10-year yield. This is the topic that we're going to be discussing in a little bit more depth today. We're going to be having a look at where the 10-year yield could go, what it means for the US dollar, what it means for stocks. But before we do that, I want to talk about the data that we've just had. Okay, so we've just had the core PPI, okay, and PPI month on month. We've also had the year-on-year data as well, which climbed to 3.3% from 3%. But if we look at US core in particular, we've actually seen this move down to 0%, which was beating those forecasts of 0.2%, down from that previous 0.2% as well. So quite a good number if you are bullish stock markets. If you're negative US dollars right now, I'd say that's a pretty good number. We're seeing that the market is trying to price in that kind of inflation situation. You can see here on the US 10-year, why we're seeing that rip higher is because the market is trying to predict what those inflation pressures are going to be in the future. And they are essentially saying that the Fed should not cut rates or even consider holding rates. There's actually now a 46% probability that we should hike rates, which I think is absolutely nuts. But this is what the market is trying to price in at the moment, what the bond market is trying to price in. So this cooler inflation is something that we might see a little bit of a call off in the US 10-year yield. Do I think it's going to happen right now? No, because we do have CPI data coming out tomorrow as well. So there's going to be an added sort of pressure there. But we did see PPI month to month come down to 0.2% as well. Look, you know, we've got to be frank as well. What's happening in energy prices? Energy prices are rallying. So I can see CPI tomorrow coming in a little bit higher. So we're going to be taking a bit of a look more at the core numbers coming in. But why is PPI so important? Now, I always kind of talk about fundamentals here on the channel. If you're not familiar with fundamentals, that is absolutely fine. It's something that I think will only benefit you to know about. So when we do talk about fundamentals, I like to just kind of show what it means essentially. So the core PPI is the change in price of finished goods and services sold by producers, excluding food and energy. Why does it exclude food and energy? Because they are what is considered as volatile. The changes of prices of food and energy are quite volatile. That means that they change quite often. So they will have an effect anyway. So what we're looking at is the sort of goods and services that are sold without that involved, and that's going to give you a little bit more of an understanding of what actually is happening in terms of consumers. So if we take a look at what happened to the PPI then, or what is PPI, let's exit this detailed view here, have a little look. So that's the change in the price of finished goods and services sold by producers. It's a leading indicator of consumer inflation. This is the big talk this year that you're going to hear again. Inflation was the big talk a year or so ago. It then kind of changed into sort of labor market data. It's now starting to have a little bit of a change again, and inflation is now being the one to talk about. So essentially what happens is when producers charge more for goods and services, the higher costs are usually passed on to the consumer. Okay, same with energy and oil. You know, when you see oil prices rise, you'll see it at the pumps a few weeks, maybe months later. Hi Bongo, hope you're doing well, mate. So that's what we've had today. We've had that number come out. Now stocks have actually reacted pretty good to this. If we go take a look at what happened to the US stock markets, you can see that we're up 0.25% or 0.25% today. Not amazing move, to be honest, because I think there's something underlying this, but you can see that we actually did have an initial positive move where the market did rally a little bit higher. We are still struggling to kind of break and close into new highs here on this hourly chart though. So market's still struggling to really kind of make consistent new highs here, which makes me think that we are still a little bit more on the bearish side of things when it comes to the stock market. One thing that I always like to look at when it comes to stocks is the volatility index. What has the volatility index been doing? It actually come down from the highs. Started at we opened the week around 22, which was quite a significant move higher in the volatility index, and you can see that since December of December of 24, but 24th of December, so Christmas Eve, we've seen this move higher in the volatility index, which I will just say for now is not an unusual thing. If we go take a look at volatility index futures and we have a little look at the seasonals surrounding this, okay, typically we see a little bit of an uptick in December, okay, and then we can also see a rally in January through to the middle of March, okay. Now one thing I did want to point out here is this little highlighted zone here. So between January 15th, okay, and I'm doing a short video about this at the moment, which I'll edit up and send out after, but the 15th of January to the 5th of February, we have a really unique pattern here. So it has a 68% win ratio, okay, so over 35 years of data, 24 years has resulted in a positive move higher for the volatility index between that period. So that's something to take note. If we also have a little look at the 20-year period as well, you can see that we have a bit more of a successful move. Same period of time, 15th of January to the 5th of February, we have a 75% win rate at this time. It's condensed the data into a little bit more of a tighter range. 20 trades this time, 15 winners, 5 losers. So what does this tell me? Well, this tells me that typically, okay, from a seasonal perspective, around this time of year, volatility index can rise anyway, okay? Now, I'm just going to have a little look at post-election, okay, because this is where we're at pretty much. Now, post-election, we don't really typically see that, right? So when we come into, you can have like election years, midterm election years, pre-election years, right? Now, typically on a post-election year, the volatility index can actually fall early in January to the start of sort of February there. So that's something to also take into consideration. What kind of year are we in? We are in a post-election year now. So we're looking to see how is this going to impact from a seasonal perspective. So I just want to give you a little bit of grain of salt there. Although over 20 years, we do get this potential seasonal play on volatility index, the current year that we're in is a post-election year. So we're having this kind of battle here of what we're going to see. Right now, we are getting that rally. The market is starting to push to the upside here. And it's something that I'm keeping on my radar, because if I want to be bullish stocks, I don't know if anybody else wants to be bullish stocks, but typically in a post-election year, stock markets do okay anyway. I'm not necessarily bullish stock markets, because although the US economy is doing okay, I don't really know how Trump's tariffs right now are going to play out. There is a lot of talk that they might be a little bit softer than what has first been announced. He's come out with some tweets and stuff like that, talking about how he will continue to implement tariffs. So there's a little bit of a question mark over tariffs that are going to be implemented and how aggressive they're going to be. So in that sense, that might kind of play into the volatility index's hands here in terms of upside. But if we do start to see this kind of positioning from the markets where they're not too bothered about sort of Trump's tariffs right now, then we could see volatility index dip off. That's what I would say is where the trade is right now. For me, is looking for the volatility index to kind of taper off, or at least kind of show some downside, because when the volatility index does move lower, then what happens to stock markets? They rally. Okay, so looking at the S&P 500 right now, we are sort of breaking into new lows. We're holding below previous swing lows right now. There is a nice demand zone towards the sort of 5,700 level, which is where I'm kind of interested in price. So I would like price to kind of move here before kind of moving to the upside. But I'm also taking into consideration that if we do break into new highs, maybe hold those lows there, that could be something that ignites a little bit more of a stock market move at the moment. So keeping a little eye on that. One thing I'll also consider is the relationship between the stock markets and the stochastic oscillator. When we go into that kind of oversold territory on the stochastic oscillator and we break out of it, there can be moments where we do get these kind of big runs in the market, and we're not quite there yet. Okay, are we going to see a similar thing here? So yeah, I still kind of want to favor a little bit of downside before that kind of breakout move. Maybe we're going to see this kind of bearish stock market move until Trump actually steps into office on the 20th, and then we might see that little bit of a change around there, but not expecting a move like we've seen since 2023. The market has been on a sort of exponential rise through 2023, 2024. So I expect some kind of cooling of that situation. So but in any means, you've got to trade with the trend, and the trend at the moment is still technically to the upside. So looking for opportunities towards the stock market there. All right, guy, hope you're doing well. So what else has been happening around the markets? Well, if we go take a look at the US dollar index, the market pretty bullish here. We've broken into new highs. I've been looking at this chart quite closely and its relationship with the 10-year yields, and it has a positive relationship with that. Market has broken into new highs here. I don't think, although the dollar is such a strong currency, and I do feel like it's overbought, I don't think the change is here just yet. If we look at it from a currency strength and weakness point of view, we have been sitting at +7 for a little while now. Okay, so the dollar here, still the strongest currency, and I don't see any changes to that just yet. I think that we're probably going to see a little bit more of a move, which is going to reflect what happens here over on the US 10-year yields. Okay, so I'm going to be keeping an eye on this chart in particular, because I'm interested to see if it reaches the 5% mark again. I think if we hit the 5%, it could be a sell-off. The last time we saw this sell-off in here was in October of 2023. And if you go and take a look at the US dollar index in October of 2023, it was this area where we found resistance and the market moved lower. So I'm looking for a similar thing to happen. I'm looking for the US 10-year yield to reach 5%. And then I'm looking to see if we get a rejection at that point. You know, I just think this market is fairly overbought right now. But I don't want to go against it. I don't want to go against it at the minute. I just think that while the trend is there, you know, you may as well stay with that. The one thing I would say is highs are kind of faltering a little bit. You know, you can see here when we broke into a new high, market rallied aggressively. That was the election candle. Again, we broke the high, we kind of sustained above it, and the market moved on a little bit. But now our highs are becoming a little bit more shallow, where we kind of get the break, get a pullback. So I think we are starting to approach the time where we should be looking at sort of dollar reversals. It's just, it's not formed yet. It's not formed yet. We've got to be aware that we don't want to jump into anything too soon. Ratish, thoughts on gold? Gold's an interesting market. I think there's kind of two sides to kind of gold at the minute. Starting to see a little bit of a pullback coming in here right now, which I don't mind. I actually wouldn't mind being a buyer of gold. I think that if we are going to see sort of US dollar weakness, that can compound sort of the interest in gold. I want to see the market flick risk on again. I want to see the stock markets perform better, because, you know, when we do see stocks perform better, we also see the likes of gold perform better as well, because people are more willing to invest capital. So I like the idea of being a buyer of gold. I need to see, obviously, think about it. Gold's been bullish despite the dollar index rallying. Usually there's a correlation there, not all the time. I think it's a bit of a loose correlation. You know, you always have to check those correlations. But if the dollar starts falling, then I believe that, you know, gold prices could continue to push higher. If inflation starts falling as well, I think we'll probably see some gold as well rallies. People will be looking to invest their capital, and there's been a lot of stories around gold recently, so I think people would be looking to get involved with gold. Now, if we look at it from sort of a technical point of view, you know, the daily chart, we are making new highs here, kind of working within this area, right? So kind of that high to low there, market's still kind of working within that zone. So I think if I'm going to be long, I'm going to be long up into this high. But if we were to break this high on gold, which is quite a significant level if we take a look at what's happened in the past, sort of around about that $2,700 level up to $2,725, you can see that it was supported here, resistance, resistance, resistance. So I think this is a clear area where sellers and buyers have been active in the past. So I don't really want to push a trade beyond that point. I would probably be looking to buy into that level, and then if we take it out, we could see a move back into the all-time highs there. But we'll have to wait and see, you know, because I do feel like if we are going to see the volatility index continue to push, then I'm going to be a little bit more on the cautious side there. Cooler inflation data is pushing gold lower, so if we continue to get that as well, then that could be a little bit of an interesting outlook to have a look into. At the moment, you know, we're in that sort of daily phase too, aren't we? This could be a secondary phase that's forming. Market has made a new low on the daily candlestick. So really speaking, what you've got here is the 4-hour sort of downward trend that you typically associate with a pullback. So if that changes, right, then, you know, maybe that's going to be the point I'd get involved with gold. But until then, I'll sit and wait. I'll sit on my hands a little bit. Have you covered euro dollar? No, I have not. Let's go take a look at euro dollar. So we have started to see a little bit of a sort of turn, I'd say, in the currencies. You know, the market formed a new low here, but fail to create a close below that low, would that make me want to be a buyer? No. Okay, I don't think that makes me want to be a buyer of this market. I think there's still sort of a deep problem in Europe. One thing I would say is, when you look at sort of Europe in comparison to the S&P, and you take out the sort of top 10 performing stocks in the S&P, which is pretty much dragging the whole S&P market up, that includes sort of like your Nvidia and whatnot, Europe's actually been performing better than the US in that sense. So without those companies in the S&P 500 stock market, so like your Apple, you know, Nvidia, Microsoft, or you know, Alphabet as well, without those, then the S&P 500 is a little bit underperforming. It's just the concentration risk of those top companies have been seeing prices move. But yeah, euro US dollar for me, I like it. Like, don't get me wrong, I want to look for a rejection here. I just can't see it happening right now. It's a little bit too early to tell. You know, if anything, you're back in this kind of move higher. I think if you're going to see a sort of 4-hour upward trend here, I'd be looking for breaks of that for continuations right now, because although you're getting this little bit of a move higher, you've got stochastic divergence. Arguably, you're still below the daily 50 moving average, which for me is still bearish. Market is making lower lows and lower highs. And also, the COT reports aren't really helping us in the market at the moment when it comes to Europe and euro in general, especially from the futures side of things. If we look at euro, 97, 95%, yeah, that's good, you know, and that's something I would say, you know, this is where I want to be starting to look for reversals, but it's not an extreme anymore, and prices have gone further than that when the extreme kind of came around, and prices have moved further. We're not seeing the same level of sort of selling from hedge funds, same level of buying from commercials. So I'm a little bit cautious on euro against the dollar. But if you did want to expose yourself to Europe because you think euro is a stronger currency, right? If I just flip back to the where is it, the currency strength meter right now, euro is the blue line, so it's actually not doing that bad really, considering. One chart I would probably favor it against the most is the pound. Okay, and I think we spoke about this a little bit last week. Euro pound is a market I like to the upside, and it looks like it's just continued to move. I haven't got an entry into this at all. I was looking for initial pullbacks into 82.58. We didn't get that. We got a break of that sort of trend there. Market has continued, but I've missed out on that sort of rally in here. But you know, what do I like about this? You've got all this support here now, right? So if we do see rejections in here and sort of a sort of pullback, then I can look for those sort of changes for the market to move higher again. So I think if you're going to try and take advantage of euro strength, pound is a place to potentially look to do that. Potentially the Swiss franc. I say that loosely because I quite like the idea of selling the Swiss franc, but with the uncertainty around at the moment, that could be a dangerous sort of play. We are kind of getting this ascending triangle pattern, which is a pattern that I do quite like to trade, because what it shows me is that, yes, you have resistance here, but the sort of lows are getting higher, which means that sellers that are getting aggressive at this resistance level aren't willing to push it beyond and into new lows and favor new lows. So that to me is a key area. And if we look at it from a monthly point of view, look how far this Euro Swiss chart has moved. You know, lows were formed in December of 2023. We've come back into those lows, and what has the market done since finding those lows on a monthly chart? It's gone nowhere. it's gone absolutely sideways, right? Market has just gone sideways since August of last year. Okay, so we've not really done anything. So I think if we are going to see sort of breakouts, I'm more favored to the upside here on Euro Swiss, just from a bit of a value point of view. So if we can break and close above this sort of area here, I think then that would be a good sign for Euro Swiss to move higher. So Euro Swiss, Euro Pound, I think are good places to look at. But that'd be the only place I really look for Euro strength. You can argue Euro Yen, but I want to be a buyer of the Yen, not against the Norwegian krona because of energy prices moving higher. Aussie, no, don't fancy it. Kiwi, I want to be a buyer of Kiwi, so I don't see this one either being a significantly bullish market. I might be wrong, but I'm willing to be wrong on those and try and target something where there is clear strength and weakness within the market. So I wouldn't really necessarily be focusing on euro dollar right now because the dollar is such a strong currency. Don't think you're going to get much value here. But against other currencies, I don't mind it. If we look how pound's doing as well. Pound is seeing this continuation from last week. Pound Kiwi, pound Swissy, pound Yen, pound CAD, all seeing that kind of downside. So pound is looking like the one to continue to sell at the moment. Buying that pullback scalping, okay, as long as you keep your risk management tight and everything's all good, then that's all good. Can you review silver, please? Yeah, I'm out of my silver trade now. I got out of it last week on Friday after the sort of NFP spike up. So I ended up just taking profits because if you look what happened here, the market just went sideways. So I ended up banking that position in there. And it was also this little area of resistance. Still like silver to the upside, to be honest. But right now, I was looking at the daily chart for a bit of a pullback. Yesterday's close wasn't great. That was quite an aggressive pullback in here. So, and we're still below that 50 daily moving average. So I want to see a little bit more out of this. And 4-hour chart has started to turn a little bit. Had this kind of breakdown. So if we do continue to see lower lows, lower highs here, I'm not going to be able to buy this just yet. I'm going to wait for a turn of that before continuing to go long in this market. If I have a little look at the futures market on silver, and we have a little look at the COT indicator, yes, it's showing us that we should technically still be bullish here. And also, if we have a little look at your commitment of trader reports as well, silver did have a COT long signal from a sort of 6-month period, but that has slightly dropped. Okay, that has slightly dropped. Okay, so for me right now, I like this $30 area. I think if we can hold $30, then I'll be more bullish on this. Just waiting for another sort of opportunity to buy silver. Does gold and silver follow each other? Yes and no. There can be times where they do, but there are also times where that's not the case. If you kind of look at silver prices and compare them to gold prices over the past couple of years, then no, it hasn't been the case. One thing that you can look at is your gold to silver ratio. Okay, so it's just a gold chart over a silver chart, and it can tell you where value is. Okay, so the way I kind of look at this chart in particular is I'll have a look at where the kind of key support and resistance zones are, which gives me a better idea of where the market is kind of seeing value for each precious metal. So if gold is more bullish than silver, and you come into this kind of resistance zone, then it could be time for a bit of a change, and the silver chart might get a little bit more love than the gold chart. And that's what we've been seeing. So I definitely think silver's in that position. It's undervalued against gold right now. So, if we see this move lower, it means that the market is favoring silver over gold in those periods. So I'm going to be looking at a rejection here, which could obviously lead to silver prices continuing to kind of bounce higher at that point. So do they follow each other? Not in particular. I mean, if you look at sort of gold's run since November of 2022, that low there, prices have gone 71% higher. If we look at silver and we look at November of 2022, which is right here and around this area, prices have gone about 66%. So still a decent rise, but they're not kind of, you wouldn't use it as like a side-by-side chart. Silver's going up, I can buy gold as well. I wouldn't use it like that in that particular sense. But I do like silver longs. Do I favour them over gold longs a little bit because of that gold-silver ratio? But I would say that if you're going to trade one, don't necessarily trade the other, just to kind of keep away from correlations there. You don't want to risk too much. It's both going to be impacted by the US dollar in a way. Let's take a look at oil. So, missed our oil trade. Oil has continued to rally higher, but we know we missed that anyway. I was looking for a little bit of a deeper correction before seeing oil prices move higher, but oil prices are higher. We're coming into some key areas now, so I'm going to be looking for pullbacks on oil. I do feel that if we get pullbacks and the current sort of situation that we're in at the moment stays the same, then I don't mind being a buyer of this market, especially down towards this $75 area. But other than that, right now, let's have a little look. We've even kind of breached these long-term trend lines. Let's have a look at this weekly one from up here. Yeah, look, we're even kind of breaching that as well. So quite a lot of bullishness going on for oil prices right now. You have the sanctions coming from the Biden administration on Russia. There was 150 oil tankers sanctioned by the US, which obviously caused that little bit of a price surge as well, because they also went and sanctioned some transport companies, and as well as some oil insurers in Russia. Now, I'm pretty sure Trump's administration, or Trump, has come out and said he's not necessarily going to take off any of those sanctions. So that's in place. There's also talks that Trump could sanction Iran, which is another big oil supplier. So yeah, oil prices could come under pressure this year, and I'm expecting a bounce. I'm expecting a bounce in oil. I'm expecting a bounce in CAD. I think that those two markets could do really well out of this, but we're just not seeing the follow through into the Canadian dollar yet. A lot of risk being put in on the Canadian dollar because of the situation with Donald Trump, and unfortunately for us, that's a situation that's going to be ever evolving over the next coming weeks, especially as Canada now have to go through election processes, which I believe are in October. So that's going to be a while before we get any kind of key movement on those type of markets. But let's take a look at the currency strength meter then. Let's have a little look at what the currencies are doing for the week ahead. Where am I going to be focusing some attention? So, like I said, don't really want to go against the US dollar at the moment. Everything is still kind of pointing towards US dollar bullishness, being at +7. That means that I was still looking for shorts on euro, pound, Aussie, looking for longs on dollar CAD and dollar Swiss. Had a really good long on dollar Swiss last week, so that was a nice move. Dollar yen, I'm more neutral on, just because that we are seeing strength in the Japanese yen as well, so I'm a little bit more neutral over on that. But also, you know, kind of looking at this, I do understand that we have a bullish cut signal technically on euro, so I'm being cautious with that, being cautious with the New Zealand dollar, so that's why I've not really done anything there. And there's also a bullish commitment to trader report signal on CAD. So really speaking, I think the value is less in the majors, more in the crosses. Okay, what I mean by that is ignore your kind of major currencies, look into the crosses. Few markets that are like euro pound, like the opportunity to be bullish on that market. Bearish euro kiwi, bearish euro yen, bearish euro CAD. Don't know how those markets are performing today, because there was no setup last night, so I've not really been keeping tabs on them. You know, I'm moving a little bit lower yesterday, but today you can see they're having a bit of a pullback, which is fine. So let's have a look at some others. Pound Aussie is really where it's at. Pound Oz, pound Kiwi, pound yen, pound CAD, Swiss yen to the downside. So yeah, favouring the pound moves more than anything. Again, I'm just kind of waiting for pullbacks on these pairs, because right now I'm not getting any. You know, usually I'd be looking at this hourly chart, looking for a sort of pullback and a continuation to the downside, a break of sort of trend there. But I'm waiting for a bit of a deeper retracement on these. So hopefully we can get that. Maybe some positivity in some UK data this week might push prices back before seeing sort of continuation. So pound Oz I like a lot. If we take a look at this from a technical, I'm just going to remove the drawings and we'll kind of do this again. Let me just minimize this pane here. We can see that the market kind of broke into fresh highs. This sort of 2 level was an area of resistance, but this is a significant high that formed back in 2020. So the 2020 highs were sort of the highs where the market decided to find a little bit of a sort of stalling point, I would say, around this kind of area in here, where the market found that sort of support, breakthrough, resistance, kind of in that sort of area again when it comes to the weekly chart. When you look at the daily chart, you can see that we've started to kind of break trend here for pound Aussie. You've got this nice little sort of upward trend that was forming. We were getting nice higher highs, higher lows, formed a double top pattern, okay, where the market tried to make a new high but failed. We then breached that, made a new low, market has made a new lower high, and we're pushing down. So from a technical perspective at the minute, I would rather be on the short side anyway, but from a fundamental perspective as well, rather be on the short side. Although the Australian dollar is not necessarily performing well because of China, if you take it out of the China situation, it's got some things going for it, you know, especially when it comes to, well, one of the facts is the RBA are not cutting interest rates. So you have good interest rates sort of that are being held there, and you know, the market is pushing the downside. But I'm waiting for a pullback. If I can get some kind of secondary phase here, then I'm going to be looking for a continuation. The reason why I want that is because of my risk reward ratio. So let's say I want to target down towards this want to kind of target down at this 195.40 sort of area. That area there looks pretty good to me. It was an area where price stalled before seeing an aggressive move to the upside, but I don't want to trade it here. Okay, I don't want to trade it here because my risk reward is going to be rubbish. If I get a little bit more upside, maybe let's just say back up into that daily 50 MA, let's just say this support zone in here, right, where you've got that 198.19. Let me just change the color of these so you can see them a little bit better. All right. If we can maybe get a move up into this sort of area, I'll be a little bit more happy. And look, you know, when we get a daily secondary phase, what do we get? We get a bullish trend on a lower time frame. Look at this 4-hour trend here, right? Market made higher highs, higher lows. where did we change that condition and where did the market start pushing lower again? So when we made a new low, which was this candlestick here, which has seen decent follow through. So what I want to see is something similar. Can the market hold bottom here, maybe even pull back into the 198.16s, right? Then maybe do we break trend and does the market start pushing back to the downside? That's what I'm going to be looking for on pound Aussie. So just keeping my eye on this in the meantime. Similar with pound Kiwi as well. You know, I really want to buy Kiwi because of the situation with the commitment of trader reports. I just think that's a good idea to be a buyer of Kiwi right now. Do I want to go and buy it against the dollar? No. Okay, you know, when we have a little look at the New Zealand commitment of trader reports, we can see we have an 100% signal here. That just basically tells us over a 6-month, over an 18-month, and over a 36-month period that the contracts are at their highest levels they've ever been. I can show you and prove to you that with the data down here by looking at the net changes, right? And I can zoom back. And I can go all the way back to, what is that going to be, 1997 on this chart, and show you that the commercials haven't been long or this long ever in history, and they've never been this short. Okay, so that to me is a strong reversal signal. The problem we've got with that is, you know, I don't want to be buying it against the US dollar because Forex comes in pairs, right? We want to be trading that against weaker currencies. I like Kiwi CAD. I think that's Kiwi pound Kiwi. I think that's a good market to have a little look at. I also like Euro Kiwi. Okay, but Euro starting to be a little bit bullish. Pound Kiwi I really like. It's a weak currency. I think that we can get some value there. The other one I like as well is Kiwi Swiss, but I'm waiting for an opportunity to form on that one. Just waiting for this daily moving average, 50 moving average to be broken and whatnot before I start looking at this one. But if I go back to pound Kiwi, very similar to pound Oz. I've just got a little bit more behind it because of that COT signal. You know, I wouldn't mind seeing price try and breach this kind of 2.18 level. You can see that we're kind of doing that already, but these were significant resistance points. If price can hold below that level, I think that maybe we can then see a continuation of some downside here on pound Kiwi. So this would probably be my favorite chart at the moment. Again, I need to try and see some kind of pullback in this market because we're just kind of straight lining right now. I can't see me getting any value in terms of my risk reward ratio. You know, again, if I just kind of play it, I always say to myself, where do I want to target first? You know, can I target at this area here? Consolidation, where a lot of volume would have been built. We saw a lot of breakouts from that. So maybe this is where I want to target with price. But looking at my risk reward ratio, you know, that's a 1-to-1, right? You know, if I just say my stop loss is up there. But, you know, if price pulls back, I can get a better risk reward ratio depending on obviously how far it pulls back and kind of where it goes. But, you know, just similar to what we talked about on pound Aussie, when you look at your secondary phase on a daily move, what is that? It's a little bullish trend on a lower time frame, or in this case it was a bit sideways, a bit of a rangy market. But you can see we still technically made a new high, still technically made a higher low. We just failed to make another higher high at that point. And once price broke it, the market started to push to the downside. So again, I just want to see some kind of pullback in that sense. I want to see some kind of move back to the upside, and then, you know, I'll be looking for changes in that trend in order to be a seller of this market, essentially. Now you could try and sell this intraday, you know, I don't mind that. You know, if you're looking at it from sort of hourly point of view, for bringing the 200 EMA as well, you know, what I typically also look for is for price to come back to the averages and then look for a sort of a breakout. But it's a similar situation. You know, if you get a little 4-hour pullback, you know, you can look at the breakouts of that 4-hour pullback. But I feel like for me to get some real value right now, I need to see price on a daily chart kind of come back into these kind of levels. So that's what I'm waiting for. That's what I'm waiting for at the moment. Now, like I said, Kiwi I do like. You can see it against CAD is kind of holding up a little bit. CAD's been a little bit of a stronger market across the board. Swissy is an area that I do like. If we again kind of go up to the monthly chart, this is a very, very bearish chart. But you know, if we go take a look at the weekly, we've been kind of holding in this area. When I think about buying the New Zealand dollar, I want to go and buy it against currencies that are weaker. Well, I've got the Swiss franc down as a weak currency, so I'm looking to try and buy this. Do I have the conditions yet? Right. So whenever we talk about this, it's why do you want to be a buyer of this market? Well, I've got a Kiwi. That's meant to be a Z. Kiwi COT signal. The conditions. Do I have the conditions to buy this yet? No. Why? Because while the market's not making higher highs and higher lows, it's below the 50 daily moving average. So I can't do anything yet. I can't do anything. Subject to my strategy, you know, and the conditions that I need for my strategy to be more efficient. Okay, and that's why I create the conditions, or I look for the conditions for my strategy to be more efficient. Okay, I need it to meet these conditions, and they're not met yet. So I can't trade this market or put capital at risk just for the sake of putting capital at risk here. So just waiting for that one. Vincent, Pound CAD. Yeah, Pound CAD is also a very good market to have a little look at. Obviously, with the situation with oil markets right now, I'll take all these off now. They're not relevant anymore. You know, with the situation with CAD and oil prices moving higher, I think that's going to benefit Canadian dollars. Still feel like CAD has a way to go as well. So I wouldn't be against seeing this market moving down to sort of 165, maybe even lower than that, maybe even towards 1.6, especially if the pound worries do turn into something bigger. Then I think, you know, that could be a worry. If you think about it, BOE is one of the central banks that haven't really cut rates aggressively yet. And with the lack of growth and whatnot in terms of inflation, they might not cut rates just yet, which means that in the future they will probably one of the ones that will cut rates last, and that could be putting them in a little bit of pressure in towards sort of mid to end of the year. But very similar situation here, Vincent. You know, the market formed support, we had that decent rally out of it. We are back at this area now, which, you know, I don't like selling at support because, again, where's the value in doing that? You know, I don't see the value. Up here, yeah, fantastic. You know, that would have been the most ideal spot, or up here, that would have been the most ideal spot. But, you know, now, is that your most ideal area to be short this market? I don't think so. I don't think so. So, again, we're just going to exercise a bit of patience here, see if price can pull back a little bit. Come into an area of resistance. You know, it doesn't have to be anything kind of too major. But if we look at the 4-hour chart here, maybe somewhere in this 177 might be a good area. You know, let's see if we get a little uptrend into here. Maybe price can then stall and then start pushing back to the downside. Very similar to maybe what happened here. You know, market came up, stalled, broke to the downside. Can we see something very similar at that point? So that's what I'm kind of looking for there across all pound pairs, really. Pound yen I feel very similar to as well. I feel like this market could trend lower. We've broken down through some key areas now, just waiting for a setup. And unfortunately, it's not right now, but it might be next week, it might be the week after that. So I have to keep a close eye on the pound pairs at the moment, especially if the rhetoric stays the same. We do have key data coming up for the UK, and we do have CPI year on year coming up tomorrow. We also have GDP data, but I'll be shocked if that breaches 0.2%. I'd be shocked by that. And then we also have retail sales towards the end. Now, maybe we will get a little bit of an uptick in retail sales because it was the Christmas period. So this is going to be December's retail sales numbers. So, you know, maybe it will show us that, you know, from a seasonal perspective anyway, maybe retail sales should be up regardless. But look at the key central bank rates here. The UK now has one of the highest central bank interest rates right now, 4.75%. So yeah, very interesting that, considering the lack of growth in the UK and lack of GDP essentially. Hi Chris, hope you're doing well, mate. Welcome to the stream. Any questions though so far, guys? Any other markets you want me to take a look at? I think if we're going to, you know, those are the key markets for me to have a look at going into this week. When I look at it from a currency strength and weakness point of view, yeah, I want to be looking at a pound market. Kiwi starting to come off those lows. I'm interested in that because of the commitment of trader reports. And then the dollar is obviously a strong currency at the moment. CAD's starting to creep up as well as yen. So really speaking, from a short side for me, pound Swiss, I have included euro on there. Although I feel like euro is a currency that I don't really necessarily want to aggressively sell right now. I just think against a couple of currencies, it could be something to look for. But other than that, I think from the strong side, you've got sort of the Japanese yen, the CAD, the US dollar. When I say CAD as well, you might be thinking I'm going mad. But against the pound, it's doing really well. Against Kiwi, it's doing really well. Against the euro, it's been doing well. It's making new lows, so that means it's stronger than the euro. CAD yen, CAD's beating out the yen when yen has, you know, battered nearly every currency apart from dollar and CAD. CAD Swiss is also up. Okay, Aussie CAD is down. So actually, the Canadian dollar is performing really well right now. And the last kind of, or one of the last pairs to go is going to be dollar CAD. Okay, and I do think it will go. I think we will see a decline in dollar CAD, but we need to see the pricing of the dollar change. We need to see the markets rethink their dollar positioning, because right now they are favoring dollar upside. They're also favoring CAD upside. That's why when you go to a daily chart, you've been in the range since the 18th of December. That's why the market has gone absolutely nowhere, because both CAD has become a strong currency and the dollar is a strong currency. So there's no way of getting around that. Okay. The only thing you can really do if you're a scalper maybe is, you know, or how I would use currency strength and weakness from a scalping point of view is, if I see a currency that is strong against a currency that is strong, I think that that market's going to range. Look to trade the range. That's how I would interpret that. And dollar CAD is going to be one of those, I feel. I think until something really shifts here economically, then, you know, we could see a move down. Because if we have a little look at CAD data right now, then, you know, there is a real interesting sort of development, right? So if we just quickly go back to, I'm just going to go to last week's data, okay? Last week. And we're going to go to the job data. Look at Canada's job data, right? Previously was 50.5k, was meant to fall to 24.9, came in at 90.9. Unemployment rate, which is the one thing that they've really wanted to see taper lower, is coming in lower, 6.7%. So this is exactly what the BOC wanted to see. They wanted to see lower unemployment rates, increase in the employment change, and they're getting that now. So they might start to feel the effects of these rate cuts that they've had. They might start to lower the pace in which they cut interest rates. That's going to give us an advantage there. What's the position of dollar on your currency strength meter, and what's your thoughts going forward? So dollar is +7 right now. You can see it here, +7. Sorry, I don't know if you can see that actually properly. Let me just zoom in a little bit. +7. So that means the dollar is the strongest currency, but it also means that it's in a reversal zone. Okay, so the way I look at my currency strength meter, okay, so let me just put it there. Let me zoom. Let me see if I can move it over a little bit, center it on the screen. Don't seem to be able to do that. So the way I see the currency strength meter, okay, is that you've got levels to it, okay? So really the top of it is here, okay? So where you've got those kind of dots at the top, okay? So that is +7, okay? And then down here, where that one was there, is -7, okay? So when a currency is between +5, okay, and +7, that is an extremely strong currency, okay? So I always say that is very strong, okay? But I also know that a currency can't remain that strong for forever, right? So that's why I class it as very strong / reversal, because by the time we've kind of come into this area and you go and look at those charts in particular, there can be a sort of correlation between it being very strong and those prices correlating with kind of key areas of support and resistance. So for instance, just to kind of give you an example, you know, let's say euro was really weak, dollar was really strong, and dollar was at well, think of the situation now, dollar's at +7. You go look at a euro dollar chart, it's kind of hitting all these barriers of support. So that's what that means there. If we look at it from the sort of downside, again, this kind of -5 area, down to -7, that is what I class as very weak, okay, or reversal, okay? So again, very similar, but just the opposite way around. When a currency is in this position here, I want to start to see it sort of come out of that. And if it starts to come out of it, I want to start potentially being a buyer of that market. Okay, so there's some really good examples on here that we can take a look at. Let's just have a little, I guess, look at one. So this was, let's see where we've had two currencies that are kind of opposing each other. So we've got two that were opposing each other here. So this was on the 25th of November. So euro was an extremely weak currency, okay? Dollar was an extremely strong currency on the 25th of November, okay? So essentially you want to be short this market, okay? So you want to be short that market. So if we go take a look at the 25th of November on euro US dollar, we want to be technically short that market, okay, which is here, okay? So yes, this has technically rolled over. However, if we go take a look at it the week after, okay, it actually says that the dollar weakened, okay, euro stayed the same pretty much, but it was basically saying that after that week there could be a chance that the market is pulling back, right? Because the dollar has weakened, although euros remained a bit weak. I wouldn't mind it if it would punched up at the same time. But essentially, if you look at how price reacted on euro dollar for that sort of 2 weeks, it did kind of go sideways, right? The market kind of went a little bit higher there, okay? Had that little bit of a pullback move. Obviously, that then carried on because the euro is still a very weak currency. Dollar then started to regain its strength. But you wouldn't have really seen that until the 18th of December when price had broken into that low, because otherwise the market was basically going sideways at that point, you know. You can look in hindsight and go, yeah, I knew that that was going to go down. From a fundamental picture, yes. But I remember buying euro through this period because the currency strength meter was suggesting that it could rally. I didn't hold it through the highs though, because you still have to bring in the conditions, okay? And you can see that we were getting a potential head and shoulders pattern. I'm pretty sure I talked about it at the time. And I said that if we get it complete above 1.06, we could probably move up to 1.08. That was probably my theory back then. Did we break and hold above it? No. And then look what happened since the market started to reverse to the downside. But basically, yeah, it shows me that the dollar is a very strong currency right now. Do I want to try and trade it against other currencies? Yeah, you know, but what currencies is that going to be? It's going to be currencies that are getting weak as well. So what are the currencies that are getting weak? Well, I can see this orange line is starting to come down here. What is that? That's the pound. Okay, so I'm going to be looking at the pound for potential weakness. And what else is there? You've got Kiwi that's popping up, but Kiwi is still technically weak, but I like the idea of being a buyer because it's got the cop behind it. Pink line is the Swiss franc. The Swiss franc's starting to weaken on a week-by-week basis. So I would say dollar Swiss long, pound dollar short is where I want to be focusing my attention. And that's exactly what I did last week. I ended up buying dollar Swiss after this breakout here. Okay, so bought on this 4-hour candlestick here. Market rallied. Target was 91.50. Market came up quite nicely into that. Looking to potentially do the same again. I think this market is starting to get into a little bit of an overbought territory because we're coming up into this weekly resistance, and I don't really want to force that narrative there. So I'll probably hold off on that one. But essentially, you've got that kind of bullish move from the weekly chart there. So I wanted to try and take advantage of that, and market rallied nicely. And if I'd done the same on pound US dollar last week, I would have done really well. I just didn't trade pound US dollar last week, and the market fell through the floor, probably better than I anticipated. So that was just unfortunately. It's updated weekly. I update it on a weekly basis. So I monitor basically the weekly changes between the currencies. I've got a couple of videos on it if you want to check them out. But essentially what happens is on a Sunday, I come to the charts, I give it a scoring system and score it based on the trends of the pairs. What happens then is I come back over here, plot it, what the numbers were last week, what the numbers are this week, what are the changes of those, because that's where I think or in my opinion, that's where I get the value from it. It's the value from understanding what the changes are from a week-to-week basis. I then plot those into this, okay, so that I get the sort of changes there, and I notify myself that the market is doing X, Y, and Z. So it helps me kind of then go through the process of what currencies are strong, what currencies are weak, how can I take advantage of it, okay. Is there a free trading view that I can use back testing? I need a replay feature for the lower time frames. On a currency strength meter, I don't know. I haven't looked at anybody else's because I've done my own. I don't really look at anybody else's. Let's have a look. Let me go indicators. Type in there's a currency strength indicator, currency strength chart here. So let me go to a weekly because mine's technically, I use the daily charts to do it, but mine's technically a week by week change. Can you turn them off at all? No. Okay, so it's saying that the euro is the weakest currency. Let me go to a daily chart. Why does it look like this? I don't get why it looks like that. Oh, is that the end of the month? So it starts at the end of the month. So that's why it looks like that. Okay, so I don't know how that will help you if it starts at the start of a month, because then you could only really trust it towards the, is that a month or is that a year? It's a year. Sorry, it's a year's worth of data. So Why does it do that? Source, currency strength panel, top right, large, currency pair strength. Honestly, I don't know why it would start from the year. That just doesn't make sense to me, because the currency strength is going to roll over. So I don't know why that would be the case. That would make me think that it's false, because why would you just start it there? Because pound at the time was... Now, hang on, what's the green? Green is pound, right? Let me shift that up. Shift that up, shift that up. So it's actually saying pound was a stronger currency. Even throughout that period there. I wouldn't have said that, I don't think. Pound Aussie, pound Kiwi, pound Swiss. What did my currency strength meter say? Let's side by side it. Did it say that pound was the strongest currency at that point? Orange. Yeah. I mean, it was fairly high. But when did it start coming down? Probably the last couple of weeks. Yeah, I think it's hard, because the thing I find with like using other people's like indicators and stuff is you don't know how theirs is made or what the best way of using it is. Let me see if they've put a note on here. This is the first one I've looked at, so I don't know whether this is even worth looking at. Where's the code? Sometimes you can go to source code here. About this script. So sometimes they tell you how it works, and it's in a different language for me, so I don't know how it really works. Yeah, sorry. I don't know how that works. So maybe not that one. It's been that one. Indicators, currency, strength. Looks algo, I think, is a popular one, right? If I remember rightly. I don't know. I think the thing is, when you're using other people's stuff, it's hard to know what's right or wrong. So that's why I've just done it myself, because then at least in my head I know how it works. So yeah. Is the way to access yours? Would be nice to have that fundamental info. No, there's no way to access it right now. I do just kind of show it in live streams. I do have a video on how to make your own on the channel if you're interested in that. So I can quickly find that for you. So go to YouTube. Currency strength meter. Blueberry. I did a video 5 years ago now. Wow, that has flown by. Whoops, clicked on the wrong button. 5 years ago, I did a video on this. Share, copy, put that in the chat for you. That is the free guide on how to create your own. Mine is free. Yeah, mine's free for now, for the time being. It has been free for a while. I just kind of show you guys. This is my own creation here as well, Forex heat map. I'm also working on a COT indicator as well in the background. It's just that every time I open the data at the minute, my computer freaks out. So although I've got a pretty decent computer, I've got to try and find a way around that. So probably just loading a little bit of less data at a time would be one to do that with. But yeah, let's just see how the market's kind of closing out. Well, I say closing out, how it's opening for the US session and how it's taken the first sort of half an hour of the US session. We can see that the S&P starting to make a little bit of a comeback here. You know, I can see that the inflation data today has been pretty good in terms of your stock market bull. So S&P 500's coming up a little bit, NASDAQ as well. That Russell is up 1.1% today, which is quite interesting. Gold also kind of pulling back a little bit, as well as silver kind of making its way back to the upside. Keep your eye on the bond market. US 10-year yields are going to be something to keep our eyes on. If we start seeing this pull back, then the US dollar could start to roll over. Okay, thank you very much. I'm going to leave it there. Thank you. You are welcome. How do I get yours? You don't. It's not available. But if you follow that link that I've put in the YouTube chat there, that's a free guide on how to do it yourself. So I explain everything there, how I build it, how I come to it on a weekly basis to do that. So there you go. Thank you for watching, guys. I'm going to call it there. We've done 1 hour and 30, and I usually do these for about an hour. So we've gone a little bit over. But other than that, thank you for all joining me today. I hope you have a great trading week. I will catch you again on Thursday. Quick question though, fan. Euro is the order of the day for me. Took it long against pound in London and now against dollar in New York. That's brave taking it against the US dollar, but I love the pound play. Love the pound play there. Hopefully they both work out for you very nicely. But yeah, we'll keep an eye on this euro dollar outlook. So yeah, I'll be here on Thursday. Thank you very much, guys. Thanks, Ratish. Thanks, Harmy. Hope you do well for the remainder of your trading week, and I'll speak to you then. Cheers, guys.